My friends, long time no see. Let's do a quick little AMC video. If you're wondering where I've been, then I haven't made a video in I don't know, it's been a while. But if you're wondering where I've been, I posted on Twitter, which if you haven't done so already, please follow me there. Colin_Gladman is going to be the easiest way to keep up with updates. But I posted on there that both on my Twitter and through YouTube, I am not going to be covering AMC exclusively anymore. No, it's not that I don't believe in the play. Yes, I still have all of my shares. Yes, I still have all of my ape shares. I've only bought more since then. But I was really kind of getting away from my mission, if you will, from the whole reason that I wanted to start posting in the first place was to help retail. And the reality is when AMC is trading in very small ranges because the price is being beaten down, and there's multiple after multiple after multiple golden setups in other stocks that are out there in the stock market where you can make quite a bit of money, then I'm just not doing what I want to do. I'm not doing what my mission was, if you will, from a standpoint of my whole goal is to help retail traders become more educated, to understand technical analysis, and so that way you can make great trades for yourself, your family, and your portfolio. Okay. And so if I'm sitting there and I'm charting AMC all day, every day, and I'm letting golden opportunities pass me or like my Discord team by, then I'm not providing a good service at that point in time, and I would be lying to you. I would be definitely lying to myself if I think that's the best use of my time. Anybody who really knows me talks about how important I think time is. You only got so much of it, obviously, so I don't want to spend my time sitting there constantly tweeting out AMC updates and price action throughout the day when there's lots of golden opportunities and technical setups that I can be focused on instead. Okay, so I did say I would still cover important events and activities, even though so many people in my Twitter mentions were too stupid to actually read everything that I said whenever I posted about it. I said I would still post anytime it hit key levels or important updates. I would still make videos anytime something important was going on, and that's kind of where I feel like we're at right now. So that's going to be what this video is all about. I will not be doing regular daily updates. I will not be doing weekly outlooks for the most part. I will only be posting videos whenever I think it's important. I am going to start posting videos of other stocks and great setups there. Haven't decided exactly how I want to do that. I'm already doing a lot of it in my Discord, so I'm not exactly sure how I want to do it or what post I want to make for the public. But anyway, just so that way you know where I'm coming from. I still talk about AMC all the time in my Discord. So it is not, I don't believe in the play or I'm leaving it or anything along those lines. I just don't think the best use of my time is charting it all day, every day, when there's tons of wonderful opportunities in the market every single day that are passing me by. That's as simple as I can put it, okay? I think there are, for the way I trade and what I do, I'm sitting there and I'm posting, lots of updates on AMC, and a large majority of the comment section is just, oh, so you're saying buy and hold, got it, okay, good, yeah, I'll just keep buying more. Like, okay, great. If that's what you want to do, if that's the feedback that I'm going to get, then great. Like I said, I'll only post things that I think are important from a technical setup. If you are, a large part of the silent majority who's like, no, I really love your stuff. Number one, thank you. I really appreciate that. But number two, the toxicity and the culty mindset of a lot of people in this community really turns a lot of people off, okay? It really does. So if you are the silent majority, no, I'm not telling you got to go fight bullies or my battles or anything like that, but you can ask anybody who really knows me. You can definitely ask my children. The number one thing I can't stand, the number one quality that I think is the worst quality any human being can have, is to be an ungrateful person. So if you are a grateful person, like I said, thank you. But make sure the people that you're following know about it, and the only feedback they don't hear is from dipshit losers who think they can run their mouth online 24/7. Please be the person who's just like, hey, thanks for the update, man. Hey, I didn't see that. I learned something today. And I'm not talking to all of you, but it's amazing how when I posted like, hey, I'm not leaving, I got tons of DMs of like, hey, I love your stuff, don't leave. And lots of people posted really nice comments. But be that person beforehand. I'm not asking you to post 24/7 or anything like that, but you got to support the people that you like, or those people aren't going to be around, is the reality of it. So we've already spent too much time talking about this. Let's jump into the video. So I was charting a little bit of futures here. We can kind of watch how this plays out while we're talking. This to me pretty much looks like a descending triangle here. I wouldn't be surprised if this breaks down even more. So as of right now, futures are going to be red, which obviously isn't great from what the market might look like potentially tomorrow. From a SPY standpoint, I tweeted this out a couple days ago, yesterday. I think it was 2 days ago. But basically, SPY is kind of a wedge within a wedge at this point in time, where descending wedges are typically bullish formations where they're going to get a large breakout. You can see that is definitely what has happened right here. Now, SPY is coming up to its macro 382 at 378.90, which I'll go back here and just show you guys on the daily where that is going to be from. But where I drew this fib from is going to be the COVID lows, okay? So just like I tell my Discord, think of fibs as kind of like mathematical support and resistance lines, if you will, or supply and demand zones. So we are coming up to the 382. I mean, you can see last time back here, that would have been around middle to end of September, around September 22nd. Once it pushed down, came up and retested and got pushed down, then it was just nothing but downside coming, okay? This red line that I have drawn out is going to be back over here from the June lows. So we are back above it. So whether or not we come up here, we get kicked off the 382. I personally think that what we've seen the last few days is basically going to be shorts covering. A lot of news has come out basically talking about where, there's potentially going to be pauses in the interest rates and the Fed hikes. So obviously, if that happens, if the Fed essentially has to turn more dovish than hawkish like they've been sounding, that potentially could lead to a market rally. Yes, there's the narrative that, hey, it's only going to rally and going to push way up into the midterm elections, which I can buy that. I can get behind it, but I don't think that matters. What I don't think is, I don't think we would be seeing massive crashing going on with the midterms coming up, but that doesn't mean that SPY is going to rally to all-time highs or even the mid to upper 400s or anything along those lines. So I would be surprised if at this point if SPY pushed right through this macro 382, or if it did, potentially it could push up, come back down, fail its retest, then fail. So, it could, even if it did push through and it was weak and then, failed its retest, then pushed down and kind of formed like a head and shoulders look. That type of look wouldn't be surprising to me at all. It could also, push up, get kicked down at that point in time, make a lower high, and continue on down here before it starts to push back down. So I don't think, we're out of the woods just yet. Now, typically, if you do look at, the falling wedges, descending wedges and how they play out, typically your price target is where the top of my wedge starts. So if it did fully play out, from a textbook standpoint, that would be bringing SPY back up here into like the 414 range, which is obviously the macro 236. So like I said, I think no matter what, I would be surprised if a SPY just pushed right through this 382. And the reason I'm talking about how important the global market is because AMC has been following, the global market. And I don't think until the global market really rallies, I don't personally believe that you're going to see AMC, really rally. So if it pushes up here, got kicked off, and even if it came down here and just filled its gap, then came back through and, kind of had a slow rally towards midterms, that makes a lot of sense. I told my Discord, which I'll just pull it up here and go to it. Now, this is going to be, we talk a lot in here. That's probably going to take too much time. I'll find it, though. I'll post it on Twitter. But basically what I told my Discord is when it comes to AMC, just like it's gonna be the same thing when it comes to SPY, what you're really looking for is you're looking for a trend change, or at least a potential trend change, where you really start making higher lows, you start making higher highs and then you start making higher lows, and you start the stair-step process back up, which right now I'm just not convinced that that's happened. Yes, we've made a higher high than back over here in the 370. Yes, we are breaking out of this, but I'd really be looking at we need to be getting over like the 380, if you will. That's when I could really look at potential trend changes. So if it did push through, and then had its retest and then came up here and then you came back down, but then you made a higher low, like I said, all that makes a ton of sense. What we're looking for is we're looking for trend changes. So if we come over here into AMC's chart, it's essentially going to be the exact same thing. Now, for AMC, though, I do believe that we've made that higher high that we were looking for. So I told my Discord this morning, really until AMC gets over this, from where this little bear flag that broke down, until it makes a higher high above that, I'm really not even looking for a potential of a trend change until it pushes, this top of the wedge at that point in time. So this descending wedge here that's on AMC. So once again, SPY's in a descending wedge, AMC's in a descending wedge. It's obviously got some critical both support and resistance. Just like I teach in my Discord, that when it comes to key support or resistance lines, what I really like to see is when it acts both ways. That means your trend line has acted both as support and as resistance. You can see that from this back here on the May low, where it was support, it broke, then when it pushed back up to that, then it acted as resistance. So I think even coming out of here, we're going to have to deal with this trend line again in the future. So just like that, on the opposite direction, right here, back in July, the big push down that happened right before the run, before Ape released, is going to be, it was its resistance points, and then you can see the collapse after the last AMC earnings was right here. So what was resistance now became major support. So we had that massive pre-market and after hours dip, and then that's whenever it rocketed up back up to that 26, 27 level. Once again, that was before pre-Ape. So as of right now, it's pushed up to the top of the wedge, and right now, my friends, I'm on the hourly chart. So it did break out on the hourly candle, but it did not hold support. Okay, so it broke out on the 1 hour, but that hourly candle did not close outside the wedge, and then it got pulled down after that. So if you can't even find a breakout on the hourly, then in my opinion, it's just not a good clean breakout. I mean, you can see right here, it pushed up. This is going to be on the 15-minute chart, my friends. It pushed up. It got rejected the first time it tested the wedge. Then the second candle, what I do like to see here is the increasing volume. But then what I don't like to see here is I don't like to see the selling pressure start to pick up as it broke back down. We were talking in the Discord right here about how I really wanted to see it hold the 9. The RSI was getting super overheated. When AMC was making this move, golly, it was all the way up to 90 at one point in time at its peak. And like I said, you can say what you want. It don't matter in a squeeze. And it's just not reality, okay? It's just not going to keep going once it hits very important levels. I've shown in the past before. You don't believe me? Go check it out. It's no secret and it's no surprise that both the January and the June run, massive squeeze moments, both happened and both topped out pretty much at 95 on the RSI on the daily, okay? So it does matter. So right here, you pushed out, you got rejected, coming back down. So what does this mean? Well, from a bullish standpoint, what we want to see now is we just don't want to see it come back down and start to make a lower low. I don't want to see it essentially, it came up here, now it's getting kicked off. Now it's got to come down here and test the bottom of the wedge and, just kind of keep ping-ponging around here before eventually you get the breakout and the move. That's what you don't want to see. That just is going to take a lot more time. Now, just like when it comes to most patterns don't play out to the very end. So I could extend these lines all the way out till they come to a point, but I don't think that doesn't typically happen. Just like when you see typically your pennants forming, typically around like 20 to 30% left of the pennant, it makes a decision as far as what direction. In fact, I'll just kind of show you because I did it twice today on SPY. So let's see here. So the first one that I drew was right here on, we gotta start with today. And let me go to the 5 minutes. Sorry, going on tangent. But if you're here for education, you'll like it. If you're here for wind squeeze, you're not gonna like it. So look, there's probably about 20-30% room here. You got the direction that SPY was going to be going in. And then I think it was this one. So kind of same thing here. Probably about 10 to 20% of the room right here. Boom, came down, retested, continued to push on up at that point in time. So that's kind of what I'm talking about. So when it comes to AMC, even though this is a more macro view, obviously, I don't see a reason that it's going to continue to ping pong around in here. I drew these three support lines up. Let me go back to the hourly so we can get the bigger picture in here. But basically, these are just our major touch points and support points that really got us to push up. So that's why the 683 was important, 637, and then eventually, of course, the 609, which would lead to a double bottom at that point in time. But I think the most likely thing here is going to be what happens with the overall market. If we're only getting a small relief rally before a push down, then I do think it'll come down here and retest the bottom of the wedge, maybe find that support right here around the $6.37, or even if it's just a slow bleed from here all the way down to the 609. So like I said, you need to keep an eye on the overall market regardless of what you think, all right, or negative beta or anything along those lines. So if the overall market is bad, it might have come down here and kind of test this 680, then kind of push out, then get some type of retest before a push back up. What I like to see is, well, actually, let's just draw it out from a fib standpoint, is what I'd like to see is going to be, so obviously this is going to be a very micro fib, but your most bullish retraces, or where bulls are typically going to be stepping in, is kind of at that 382 level. And just as I'm looking at this right here on the 1 hour, you can see, let me zoom in here closer where you can see, my friends. I mean, look at that. The RSI got overcooked on the 1 hour today too. The 4 hour and the daily still have room to run. So it just might need to be a kind of intraday cool down. Like I said, I was telling my Discord that typically when AMC is running and it needs those cool off periods, then typically it forms either bull flags or those ascending triangle patterns that I've drawn out many times before, is typically going to be what you see whenever AMC is running. So it'll cool off, but it'll cool off in very bullish patterns, if you will. So the 9 EMA would be coming up and hitting AMC right around the 382. So I'd really like to see this $7.50 range hold. So if we did to continue to push down here in pre-market and then made another go of it, you'd probably get stopped out maybe from the high of yesterday, then come back down here to the 236 area, and then like I said, just kind of keep stair stacking its way out of here. That's going to be its most bullish case scenario. Okay, so like I said, once again, we got the higher high. In my opinion, this is obviously, so this was a high before another nasty breakdown. Now we've got the higher high. Now we're going to be looking for a higher low for continuation. And obviously, like I said, it's going to help if the overall market or if a GameStop or anything along those lines. Shout out to my buddy Bronx Viking in my Discord. He talked about how there was a whole bunch of in-the-money puts sold on AMC today. He got all of us on a bunch of AMC calls. I don't remember what part of the day, my bad, Bronx. But it's probably around midday, and lots of people cashed out at over 135% on those calls. Now, like I said, potentially could be running. Full disclosure, I don't have any open AMC as far as option plays go right now. I don't have anything open. I have no calls, nothing open right now. So that's what you're going to be looking for from a bullish case scenario. If we look at this from a kind of local fib extension, and like I said, it really just, the RSI is going to have to cool off a little bit here. I mean, look at that. Look at that. You think from right here to right here to right here, you think it's an accident? That the 1.618, it's almost exactly where it got stopped. It's not an accident, my friends. You need to learn how to use these fibs. You want to be a successful trader, please learn how to use these fibs, okay? So, and I mean, look, that would be the what did I say that was? The 382. That 382 is basically coming down here, which would be the one extension, and then it would push back up. I mean, I'm telling you, if you want to see bullish case scenario, you want to see something like this playing out, okay? That's pretty much going to be it. So overall, this move, I mean, you can see how the 3.618 is going to be right here at this breakdown. The 2.618 is going to be right here at this. So, I mean, it's just no accident that you see at these fib levels is where you saw chop going on. So these fib extensions where you saw the chop is going to be happening. Another thing, anytime you see a bunch of chop at a fib level, especially pushing up, if it hangs out, so let's say we come up here, let's say this plays out tomorrow. Let's say we get to the 2.618. If you just see chop after chop after chop after chop, if it just hangs out here, the longer it hangs out at these key fib levels, the more likely you are to see the push down afterwards, okay? So if you start seeing a bunch of chop for a long time, let's call it an hour or more at a fib level, you need to be, especially if you're holding options, you need to be cautious about when you want to take profits, okay? I'll leave it at that. This video was a little bit longer than I anticipated, so once again, I'm not going to be covering AMC exclusively, but if you're here to learn about technical analysis, I will be putting out other videos on other stocks. I mean, I make so little money from the YouTube, monetization process or anything like that. It's just the hours and hours that I put in. It's just not worth my time to cover, like I said, 30-cent moves. I said I would cover big potential things, and pushing to the top of a macro falling wedge is a big potential setup. So let's just see what the overall market does. That's going to determine whether or not we got to come all the way back down, whether or not we get a bullish continuation. Let's go over here. And oh no, still just trading in there, man. But I'm telling you, this price action, this is gonna dump. Okay, so that's my bias anyway. All right, so we'll keep an eye on SPY. We need to see what these falling wedges, how they're gonna play out. Obviously, you got the breakout on both of them. So essentially, the smaller wedge that SPY was in, you got more than its upside target. So if your price target would have been, taking profits at that 372 range, I mean, you got more than that. You got all the way, how high did we get today? We got all the way up to like 378. So I'm very cautious. Like I said, look at this 382 fib. I'm very cautious about what's going to happen on the 382 fib, especially if the price action stays or starts getting weak. You start seeing a lot, even if it breaks through, you start seeing a lot of long wicks at the top. You start seeing a lot of chop right here. I'm telling you, it's coming down. And like I said, that doesn't mean crash necessarily. I do eventually think that this correction is going to play out to around the 330 to the 350 range. I'm not quite as, I think the world is ending, and this is going to be a black swan event or anything like that. So, like I said, at the end of the day, I do think that the overall SPY correction is not done. The way it could potentially be done is if the Fed comes out and is like, hey, we ain't raising any more interest rates. We're going to get way more dovish on this deal. We're going to turn the money printers back on, all that good stuff, which obviously, they've been beating the hell out of the interest rates, and so far, I guarantee they're not getting the result they wanted to on inflation. So I just don't know that they are going to remain super hawkish, especially with what was going on in the bond market. So that's going to be the conclusion for this video. And I don't know when the next video is going to be. Like I said, I will be putting out other technical setups on other stocks. But if you're a person who does appreciate what your YouTubers and influencers and all that kind of stuff put out, man, it literally takes 2 seconds to be like, hey, man, thank you. Okay? Drown out those trolls. I'm not asking you to combat those trolls or anything like that. I have zero problem doing that myself. But it literally takes zero time to be like, hey, I appreciate you. I know you spend hours of your time for free to do this kind of stuff. I appreciate you. Okay? So, like I said, you want to keep your favorite influencer or poster around, especially in a super toxic community like the AMC one, then say thank you. Takes zero time to do it. Much love, my friends. If you've always been a supporter, I appreciate you. If you want to learn more about technical analysis, that is what this is going to be about. Last but not least, shameless Discord plug. I'm not just doing signups for my Discord on Fridays anymore. I'm taking them at any point in time. I just got to have a space available. So if you're interested in joining the then please reach out to me on Twitter. Dudes are killing it. 223% on QQQ, 75% play, 97% play on Tesla today, 135% on AMC, 50% on AMD, 47% on Netflix, and I don't have any spots right now. Okay, so the 3 spots I had today are already full, but at the end of the day, there's always going to be people who don't renew. All right? Much love. I will see you in the next video. Have a good one, my friends.